Here we go, guys. Another video with Mike, special guest Ronald, myself, lifestyle investing, where we invest based off our lifestyle to build a future lifestyle.
That's right.
Super excited.
Yeah.
Dude, we learned a ton about making tons of money.
Yes. I know, I'm going to start my own Amazon. I'm going to start competing.
We are going to compete against Ronald right now.
It's a free market. Anybody's welcome to join.
Yeah. So we had a great question. You had a great question.
Yeah.
That I'm really curious about.
Mm-hmm. So when you're making the profits, when you're seeing the money come in, how do you decide at this point in your business what money to put back into the product and the business, and what money do you use to invest? Because like we talked about, you're not investing as much now as you were at Symetra, but you still have that on your mind. You're still looking for opportunities. Yeah. So talk a little bit about that. Maybe a little bit about what opportunities do kind of pop up in your vision. Okay.
So how I do it is I also look at the rate of return. So if I find a stock and I go, okay, well, I'm expected to make 10% on the stock by next year, versus if I buy $10,000 worth of products, I could probably make 25-30% return on it. Then that makes more sense for me to go into the products.
Yeah.
But my case is a little bit different because it's kind of growing. So you have to make that distinction between growth and then stability. So to me, I always look at, okay, what are my expenses that I need, and then how much does that cost to cover everything, and then anything outside of that, that's when I would put some money aside. So I'm not so aggressive in a sense where like I don't neglect like my savings, I don't neglect my investments and things like that. We always make sure to have some long-term investments in some way, shape, or form. You know, like usually stocks is the most liquid, and with a growing business, I need liquidity.
Yeah. I think that's a good thing. Yeah, because if you buy real estate, right, you pop like 30, 40, 50 grand in there, you can't just like pull out some. But from the stock, even if it drops 20%, you can liquidate and go after a 30% return.
Yeah.
So I totally see that.
Yeah. For me, it's always dependent on a case by case basis. My life right now with a growing business, I need liquidity, so I tend to put it more in stocks. And then I look at what are my living expenses? How much does that cost? And then outside of that, if I make any extra, that goes to savings, that goes back into investments.
Boom! So you're investing as your lifestyle is today.
Yeah.
Dude, that's what the show's all about.
That's exactly what we talk about. Exactly what we talk about. Sorry, man. I just had
because I was making our heads explode.
Right? I know. It's like, oh my gosh, we're like on the same paragraph.
Yeah, it's all about what fits your lifestyle. And then as if my income raises with my business, then I'll invest more into stocks or buy like maybe real estate, things like that. So that's how I look at it.
So you need the liquidity right now, so you're sticking with stocks.
Yeah, so
right. But then once you kind of get to more of like a stagnant, or not necessarily stagnant, right? We always want to grow.
Yeah.
Right now you're going like this.
Yeah.
Right? You're trying to go like that, but then you'll get to a certain point where it's pretty, consistent and it's pretty self-sustaining. Yeah. And then you can look at different opportunities.
Right. And then so there's something that you said in there that I think maybe went over a lot of people's heads. I don't want it to go over mine. I want you to break it down a little bit. When you're looking at a stock to buy, and you even said if something has the potential of a 10% investment, in a year, is that based on long-term stock numbers, or is it based on studies and information? Like, how do you come up with that kind of number?
Okay, so I looked at number through primarily studies. I take into like past performance. I look at past performance more from a financial standpoint, but I don't look at it from a stock price standpoint. So how I look at stocks is their cash flows. So you do like it's like a discounted cash flow model or a future cash flow model. I know it's kind of complicated for people that aren't in finance, but you can kind of project what the stock is going to be in the future based on what it's making right now at the cash it brings in. So I look at that. So if a stock is like say $50, and then in a year it's going to be like 60 or 55, and then what that return is, then I would like kind of invest based on that. Versus like products, because with the products I kind of know what they're going to sell for today, because but with stocks there's kind of that like estimate, like
the stock price is based on how many people are buying and selling. That's really what drives the stocks. And then everything else drives that number. So how do you project out if a stock's going to sell, just based on what you know about the company, or maybe what their quarterly report is, that kind of thing, or what the CEO says? It's all that kind of stuff. Yeah. It's about studying.
So I do
because you look at pure financials.
Yeah.
Right?
So
you don't look at noise.
Yeah, I don't look at noise.
Then the pro forma or the guidance? Do you use like stuff like that, guidance or
no? So what I do is I do just a lot of kind of like financial analysis. Like
so they're actual books.
Yeah, so I look at their books. I look at their financial statements. I do look at some the CEO, directors, and management. I look at how much they're getting paid. Because typically with a company, I don't want to see them getting paid more than what they're worth. Because I feel like when someone is like overcompensated, that means that they have no incentive to push forward for the job. Because I kind of look at human nature. You know, what is their incentive? Yeah, right. If they're getting paid way too much for their job, then it's like where is their incentive to push to get paid more? So I read this crazy study. It's somewhere in the book, but from Warren Buffett. It's one of his like studies or whatever that. When CEOs tend to get paid more than what's industry standard, they tend to like not do so well versus the ones that aren't being paid as much because they tend to push harder to try to get their salary up.
Yeah, I think that's just human psychology.
Yeah.
Right.
Yeah.
You get comfortable when you're making a ton, so why strive for more?
Yeah, why strive for more?
Right.
And also, if there's any like discrepancies or any like corruption, like you could, in a sense where if management's being way too overpaid and their staff is being underpaid, that's what I see. Like if management is way overpaid, then where's that money coming from? It's either coming from some of the staff or out of the cash flows.
Right.
So it's like I kind of like the puzzles. Like where are they taking this cash from? To get
which is very financial and accounting kind of background.
Mm-hmm.
That's what you have, right?
Yeah.
That kind of, so that's great.
Yeah, you're a number guy. Yeah.
I like that. Because I know that news can affect stock prices so much, positive and negative.
Yeah.
And so it's hard to be able to dial down. But if you're looking at the financials, if you have those things that you're looking at and separated, because to me it just seems a little like fortune teller to say that this one's going to go up by 10% in a year. But with that kind of information, it'll definitely give you a better idea.
Yeah.
So because we're all about studying and not putting our money where we have no idea what we're doing. So here's some tips on what we can study.
Yeah. Holy smokes.
Yeah. I know.
That's the actual step right there.
Yeah.
So the next stock you invest in, you're going to look at
how much the CEO getting paid, how much is the average employee getting paid, is it below the industry standard, what incentive does the CEO have to grow the company?
Dude, love it.
I know, me too.
My name's Bernie, Mike, Ronald, tons of knowledge going on right now, lifestyle investing, make it happen tonight.